thanks for joining us today. Thanks for clicking on the link so that hopefully this is helpful for you. It'll only be for a couple of minutes, so you can just spare a couple of minutes. Hopefully it's going to help you out for this year and maybe possibly next year for some of it. We're going to start off with some of the more individual stuff. So for those who are booking in, if you book in early, say in July or August, what you're going to need to do is basically be very accurate with what you bring in. The pre-fill's not really done, the ATO pre-fill, so you're going to have to bring in things like pay-as-you-go, withholding slips, any interest received from your bank accounts. Also your private health statements, we're going to need those. If you're in private health, you're going to need to wait until you get those down. If you're investing in managed funds or something along those lines, your annual statements normally come out late August, early September, so you might need to wait to them to get everything. When you come in, just make sure you're organised, otherwise the ATO will just pre-fill it, we'll get some audits and off we go. Also for this year, we've put a new policy in place. Our competitors have it in place, but we've never had to do it. But last year, there are a number of people who didn't pay their account, their bill that we gave them. And so this year we've had to go with a no pay, then no lodgement policy. So we've got that in place. The prices are the same as last year. We realise everyone's doing it tough, so we've kept the prices the same as last year. And also we do have a trust account authority for those that are getting refunds. You can get your fee taken out of the refund. That's fine, no problem with all of that. Or pay by FPOS or credit card. There's no surcharge that we apply there, so you can actually get some reward points while you do it or something. Other than that, the next item would be logbook claims. So if you're a car using heavily for business, so more than say 5,000 kilometres, that we can claim the rate per kilometre method on. There's only that method and the logbook method now, so if you can maybe defer coming in until your logbook's done, that'll maximise your claim. You need to keep it for 12 continuous weeks. You will attach to the email is our year-end thing on there. There's an ATO app that you can download for logbooks as well. Either that or go and pick up one for $2-3 out of the news agents and start filling that out. 12 continuous weeks. That way we get the business percentage on your car, and hopefully you've got all your dockets so we can proceed with that. Other than that, for those who've got rental properties, look, we had a few instances last year where the interest charged on the loans was not obtained. So if you're coming in, make sure that you've got that. That's a data match item for the ATO. They can just get it straight from the bank. If we're out, it puts a flag up, so just make sure that you've got that information. Also, new properties bought with the budget, what they're doing now is denying depreciation on second-hand properties. Okay, if you buy it and you've got all the dockets for everything in there, the air conditioners, the carpets, all that sort of stuff, curtains, etc., that's fine. But if you buy it a year older or 2 years older, you no longer get the depreciation. We used to have a quantity surveyor report that we got done. The ATO has knocked that out, so you might want to think about that if you're looking at buying or selling or something on those lines. It does come into play. And we're not talking about the building write-off here, we're talking about fixtures and fittings. So now also, if you're going to do an inspection on your property, just make sure you do it before 30 June 2017 if you can. I know the time's ticking, but if you can do it before then, because after that, as was in the budget also, those inspection trips, meals, accommodation, travel, etc., are going to be non-deductible. They're not going to allow those to be deducted in your return. So if you're going to do an inspection trip, do it this year. Book it now, because next year it'll be dead money. Also, those that are doing salary sacrifice, obviously your thresholds at the moment, if you're under 50, it's $30,000, above 50, $35,000. Next year, it's going to be $25,000 for everyone else. So next year, in a few days' time, come 1st of July, it'll be $25,000. So if you've got salary sacrifice arrangements in play, you may want to adjust those with your payroll officer to get those just right. Otherwise, you're going to be over, and then you get excess contributions tax, which is a top marginal rate, so you don't want that. Another thing, if you're thinking about it, is for those who may be using it, is the spouse contributions tax offset. Now, traditionally, it's the rebate staying at $540, but usually it was the spouse's income had to be below $10,800 to get the full entitlement. From 1st of July 2017, that threshold's going to $37,000. So it will become more available for partially working spouses or spouses with lower incomes at some stage. Just to make some of our young ones aware as well, the first home superannuation saver account kicks in from 1st of July this year. You can put voluntary contributions into your fund of $15,000 per year. It'll only get taxed at 15 cents in the dollar and earnings at 15 cents in the dollar as well. You can only save up to $30,000 for your home deposit, so maybe 2 years if you'd like that, $15,000 for 1 year, $15,000 for another. They can be withdrawn from 1st of July 2018 onwards to help with your home loan deposit. However, when they are withdrawn, the ATO being the ATO, it's taxed at marginal rates, but you do get a 30% offset on that. That's if it's treated concessionally at the start. Also, for those that are in the business space, the $20,000 write-off doesn't end in this year, it actually continues on to the next year. So it'll finish off at 30 June 2018. Just another thing there, used to be, it was for small businesses with turnover under $2 million. That has now been extended to $10 million. So if your turnover's under that, $20,000 write-off, great. If it's above that, congratulations, you're doing really well. Okay, other than that, just a couple of things, unique thing that I hadn't heard before, but one of the ATO hotspots for this year, things that they will be looking to is lifestyle assets. So they're going to know, they're from the data matching with Queensland Transport and things along those lines, people who hold boats, motor vehicles, artwork, and they're trading in these things and not really declaring them, or maybe doing up vehicles and throwing those off or whatever. No one makes any money on boats, but anyway, they are looking at these luxury assets, and so if you're active in that space, you may have ATO contact at some description there as well. Also, for those in the business space, there's a thing coming up called single touch payroll. It doesn't roll in until 1st of July 2018, but it only applies to those employers with 20 or more employees. So I know I'm only talking to a few people here, but you measure your 20 on the 1st of April. You can volunteer to go into this system for 1st of July 2017. I'm telling you, don't do that. There's always glitches, there's always things to iron out. Don't go in early, and it's just employees of normal meaning, so no contractors or anything on those lines getting on there. Really, if you've got 20 employees or more, you should have a software program, Reckon, MYB, Xero, something along those lines. Your software will handle this transition if you leave it long enough. Okay, and so I hate to leave you on some bad news, but from 1st of July 2018, so not the year that we're coming in, but the year after that, the taxable payments reporting system for those in business that are builders and things along those lines, they'll already be familiar with this, but that's being extended to those that are couriers and in cleaning industries. So if you're in that industry, have a yarn to me when you come and see me about what we need to do to get you ready for that. So other than that, look, I'm eager to see you in the new tax year. It's the last one's not finished yet, and we haven't finished yet. We have also, just to finish off, we've had one other thing, and that is I did put an extra guy on, so for those of you that may think things are lagged on a little bit, hopefully that'll speed things up. So we've got one extra guy on for 3 days a week, so we are getting through some of the work a little bit quicker. So hopefully that helps you out, and if not, I can't wait to see you in the new year. All the best for it, and look forward to catching up. All right, cheers.